I like to start with this slide because if you're new to the Bitcoin space, all of a sudden you start to see how much is behind this whole blockchain scene, what's developing here. Can I get a raise of hands of how many people have been interested in this Bitcoin blockchain phenomenon for less than a month? 3 months? Yeah? A year? All right, who's been into it for over 2 years? All right, so we got a good range of people here. And I've been into it myself for about a year, and every day getting more and more into it, to the point where I actually left my full-time job last week so that I could continue working on projects around this. Now, through running this meetup, I've learned that there are a lot of people who consider it to be investment, and they need to understand the difference between investment and gambling. So one of the things we aim to do is to help you figure out how these tokens work, how to value them. If you are going to invest, what is a smart way to start, possibly? The companies that are more reputable versus less reputable, help you minimize your downside risk by talking to other people who have done it. And some of us have made mistakes. Most of us who have been investing at all in it, have made some mistakes. Me personally, I'm not in the place where I'm quitting my job because I made millions of Bitcoin dollars. What I did find was a very deep interest in talking about this technology, which I believe to be the greatest incentive machine that the world has ever created. And it's going to change the way a lot of things work. I would say more so than AI or biotech or big data. It's kind of at the center of all those things, this technology behind Bitcoin, and it's very real. Whether or not Bitcoin makes it and becomes $1 million of Bitcoin or not, there's a whole bunch of business and a whole new world for entrepreneurs out there based on companies that are leveraging this blockchain technology to make a difference, to change how things work. So these are some of the companies that are involved here. A lot of people, if you just started, you're looking at Bitcoin, maybe Ethereum, and thinking, okay, I know what those are. But when we start to talk about these protocol layers, things like, who's heard of Aragon? Who's heard of Gallum? Sia Coin? Okay, so some of these are decentralized protocol layers where what we're trying to do is decentralize this whole process. So we're going to learn what this decentralization is. We're going to talk about Bitcoin and Ethereum and the cryptocurrencies or crypto assets. And we're going to find out how they work and what this decentralization actually means to you. All right, so let's go ahead and get started. First thing, we need to know what blockchain is. It's the technology behind Bitcoin. We're going to learn how that works. Secondly, since it's supposed to be a currency or money, you absolutely need to know what the functions and characteristics of money are. A lot of people don't know why their dollar has value. You hear things about the Fed, and you're like, oh my God, the Fed's printing money like crazy. But do you really know what that means and how it affects your dollar? Do you know when it's a good time for them to print money and when it's not? If we don't understand the functions of money, why is it on this piece of paper right now and why should it be digital? If we don't understand that, it becomes very hard to believe that Bitcoin is actually money. So once we talk about that, we're going to talk about, all right, if you want to switch your money from paper money, fiat currency, into Bitcoin, how would you go ahead and do that? How would you buy it? We're going to talk about Ethereum and break off into these other tokens and crypto assets, and there's a few other cryptocurrencies as well, and start to dive into the difference of them. And then the most important thing to me is, if you do buy it, how do you keep it secure? How do you make sure that you don't get hacked or just do something stupid and somebody has all your money? Before, it wasn't such a big deal if you got hacked because it wasn't final. right? If you got hacked or somebody finds your credit card, raise your hand if you've ever gotten the call from your bank that says somebody's buying $70 a pizza in Wisconsin. Is that you? There's something like that. Your bank switched it around, they changed it. With this, with it being final, we're in early stages. So it is final, and there's not a lot of people out there who can and will help you, especially not for a small amount, and the amount that's going to be important to you. Last, I want to leave you with some resources. We're going to get you down the rabbit hole. There's a few different ways that you can be interested in this. So I would ask that you fill out the sheets that are in front of you. Jen will pass out some pens over there, or Chuck, and anytime during the night, just drop that off. I'd like to see what you guys are interested in for future meetups, and I'd like to break it out so we can have a lot more events that are specifically tailored to people's interests. So right now we have some panel events, we have Q&A events. Tomorrow we have our happy hour event, which is just come in, have beers, and hang out. There's no formal presentation at all. We did a research group last Monday where we sat down as a group. We keyed out different areas of research, broke up into smaller groups, and then put it all together and outlined it. Anything that we can do together that would be of interest to you, I absolutely would appreciate. Chuck over there has a quick comment.
So, I noticed when you had the info graphic up, a few people were taking photographs of it. Could you maybe get that posted up on the meetup group for everybody?
Yeah, I'll definitely put up the whole thing. We'll put it on the meetup group, we'll put it on our channel, and get it onto my website as well. So let's go ahead and get started. Are you guys ready to get started here?
Yeah.
All right, cool. You sound excited. A lot of energy in this room. All right. So first off, how does it work? Here's a few things you need to know. 1, it's peer-to-peer. 2, it's a decentralized distributed ledger. And 3, you need to know what proof of work or the consensus mechanism means behind the blockchain. And then you'll understand that it's real and what it is. So when we say peer-to-peer, what do we mean? How many of you can accept a credit card right now? And when you accept that credit card, who do I pay first? Huh? Am I paying Visa? Am I paying Square? Maybe I pay Square to pay Visa, to pay your bank, to pay you, possibly. How many middlemen take a little chunk of that pie, right? So the first thing that makes it make sense for peer-to-peer is that it's common sense. Let's put less hands on it and less people get a little piece of that pie, right? Now, this didn't work before the Bitcoin invention because of a single very specific problem. It was called the double spend problem. And prior to double spend, what would happen with the internet is every time you wanted to share information, you would share a copy of the information that you had. Right? When you email your friend a file, you attach it, it's still with you. And you send a copy to them. With money, if I take money out of my pocket and I hand it to him, I no longer have it, he has it. Right? So that was the issue that we couldn't fix. Now what if before anybody could check or see, I tried to spend the same dollars with somebody else? That's part of the double spend problem they had to solve. And they did it through this mechanism. All right, let's say I want to go ahead and send Chuck some money. What I would do is go into my Bitcoin wallet. I would send him the money. That's fairly simple because you do stuff like that every day, right? When you quick pay somebody, use Venmo, pay a bill digitally. You're like, I was using digital money this whole time. Now, what really happens is you are sending that transaction to that bank or central authority who says, yes, there is enough money, both sides of the party. You can trust that this transaction is good because I said so. Okay, so I step in the middle as a central authority. With peer-to-peer, we have a system where we can trust the same ledger without having that authority behind that. Here's what we do. Imagine we keep all of our transactions on a little piece of paper, right? there's some rules that we all agree to follow. If I spend 10, if mine goes down 10, somebody else's has to go up 10, right? Makes sense on the rules. Now, nothing else can happen, like all of a sudden Lou's goes up 500 on the transaction where mine went down 10 and Chuck's went up 10. That wouldn't make sense, right? So the software can actually run that and make sure and say, hey, yes, these rules are being followed. So that's your ledger, and it's distributed because we can all run that software if we choose to run it. So each of us is running the Bitcoin software, and every transaction we all get to say, yes, this is a good transaction, no, this is not a good transaction. Once we fill up that page with enough transactions, we call it a block. We block it away, we stamp it and say the history of that record is good, it's final, we put it away. So with this distributed ledger, what we need to do is have consensus that every transaction is good. But we need to protect the consensus. So this event called mining is brought into the process, and when everybody at step 3 there, see, the transaction is broadcast out to everybody. In 4, we all say it's valid. In 5, we add that transaction, or technically a group of transactions, onto the block, and those transactions are now final. Now we bring in the mining. It's kind of like that, but not exactly like that bottom picture. The mining is a mechanism that protects the consensus. So the consensus protects the legitimacy of each transaction. Mining protects the legitimacy of the consensus. Now it does this through an economic system of rewards. Bitcoins are produced by this software at a very specific rate. Eventually there will be 21 million, and that's all there will ever be. At the beginning, it was mining 50 Bitcoins as a reward if you were the one who got that reward. Now, how does it select the reward? Imagine each of us who decided to put our computer onto the system. We look at every single transaction, we vote on each transaction, but we have a puzzle in front of us that we have to solve. A simple puzzle. Imagine it like a little 50-piece puzzle, like a kid's one, right? You're not eligible to win the lottery until you have solved your puzzle. If the other computers see that you voted against consensus at one point, they're going to say, start your puzzle over. You were doing that job poorly. So you wouldn't want to go against consensus and try to hack the system, because then you're less likely to get the reward. You do want to put your computer on the system because you could get the reward. So what this does is it incentivizes more people to put their computers onto the system because they might get a reward. Every extra computer that's added to the system is an extra little bit of decentralization. They're further and further out, more people. Now, what do we mean by the decentralization? It has 2 ways that you really have to look at it to understand it. People talk about Ripple. Who's heard of Ripple? They say Ripple's not decentralized. Well, architecturally it's decentralized. Its servers are all over in many different places. That's great, because if you were to attack one server or unplug it, the whole system wouldn't go down. That's very beneficial. Imagine that type of architectural decentralization being somebody's coming to get us in this room. They say, we're going to drop a little bomb right on Celtic Crown. We're going to get all of you at once because you're all in one place. You are centralized. We decide with the group here, here's how we're going to defend ourselves. On the count of 3, we're all going to run in different directions as fast as we can. Now, if they drop that bomb, they would have to drop 50 of them in every place where we all ran to. That'd be a lot harder to do, a lot more difficult to coordinate, and they would have to do it before we stamp that next transaction, because once it's stamped, it's finalized, right? So this is how We create a system of economic rewards that protects the consensus that we all give, which protects the contents of the ledger that we all look at, without having any one individual central authority that has to say that it's all right. So let's look at how it's money. It's great if we have these things on the ledger, but how does it get any value to it? Well, it's a principle of scarcity first. Anything can be a store of value. Money has some of these functions. It can be a store of value, a unit of account, or a medium of exchange. I'm getting a little dry mouth there. The store of value, that's been seashells in the past. Anybody else heard of a crazy thing that it was? A big rock? Tulips. That one's a little apropos now. Cigarettes?
Salt.
That's a great one. Cigarettes? Salt? Yeah, so the store of value doesn't have to be something of value. It just has to be agreed upon that it has value. We all see that it has value. And every one of those, why do we agree that it has value? Because it's hard to find. We have an economy of scarcity. The seashells don't work so well when you're on the beach. But if you're way inland, it works pretty well. Where do the cigarettes work? In prison, because they can't get cigarettes easily. It's the scarcity that gives them their value. With Bitcoin, there's only going to be 21 million Bitcoins. So each day, as they're used and people accept them, they get more and more value. We agree that they have a certain amount now. The more people that are wanting them or demanding them, compared to their supply, gives them that value. Unit of account. In the real world now, it's pretty much the dollar, the US dollar, that's your universal unit of account. And that's because I can point at anything in this room and say what its value is in a dollar to compare the two items. Now think about that. They all have a relative value. But if you were trying to say, all right, those tater tots, well, your shirt's probably worth about 14 of those plates of tater tots, and that table's probably worth 7 of your shirts, it would get really confusing. So we need that unit of account. In the internet of money, the whole idea is right now, Bitcoin is generally your unit of account. Everything is converted back to Bitcoin. You go onto exchanges, your trading pairs are Bitcoin to whatever you want to buy. There is a little bit now where Ether is taking a lot of trading pairs, but really Bitcoin is always going to hold value as long as it has the unit of account thing going for it. And medium of exchange means that it's easy to exchange it. Why didn't gold become the medium of exchange? Well, it was too easy to break up and too heavy to make big transactions. If you need to bust in like 2 trucks of gold, it gets very inconvenient compared to bills. Now, these are the functions of money. Over to the right are the characteristics, what it has to have to be able to be money. So as we go through, I want to compare it to, think about your fiat currency versus Bitcoin. Durability. It must be able to withstand being used repeatedly. So think about the quarter. Does anybody ever notice how there's little indents all around the side of the quarter? Does anybody know what that's for?
Well, it's not broken.
So it's not broken. Very much. When they were actually silver, people would chip the edges off of it and save and met on that silver. So we started putting the indents so that you could see that that was a full coin. They're not made like that anymore, but we still do the indents. Portability. The individuals can carry it with them and transfer it to others. Like we said, the gold had an issue with that. Other issues with portability are related to its acceptance. Bitcoin is at a premium price in China, South Korea, and India, partly because what they're, not China?
No, it's
Well, with the news there, with the new news, it is no longer like that in China. But all along, any of their exchanges were running $250, $300 premiums. And that wasn't caused because it had a different value there. It was a premium that was being charged on their money because it's not as portable as the US dollar. They couldn't take it anywhere and use it, so there would be extra steps of switching it over to a currency that they could use, an extra middleman that would have to take a little cut. The uniformity that they all are the same. The Bitcoins, they all have their little digital serial number, but you're never going to see that or know what it is. Limited in supply, we already said 21 million. We also talked at the beginning about the Federal Reserve just printing money. So compare that in your head. Acceptability. Well, this is an interesting one for Bitcoin because we kind of needed Silk Road to get it started off. So when anybody says like, oh, it's all about drugs and hookers, it started that way. But we grew up, we matured, and now it's a legal tender in legal currency in Japan. Other countries, Australia, Russia, India, are looking at doing that, South Korea, and it's going to spread. There's going to be more and more places that are going to accept it because it holds its value. Is it divisible? Well, you can divide it. One Satoshi is 8 decimal places behind 1/1,000,000th of a Bitcoin. You can't divide your dollar up that much, but it becomes very important in the internet of the future because you want to have little microtransactions in the future where you pay for somebody's little bit of time that they're watching your advertisement. Or think about the Internet of Things where there's a refrigerator that can actually pay for the products that it's ordering because you took them out of the fridge. It's automatically holding its own power and paying the company directly using this currency. It would have to be divisible for these very small purchases of energy as you go along. These are the ideas of the future with blockchain. So where are we at in terms of total money? This one here is a slightly older slide that Bitcoin is now at 60 something right now for the total market cap, 60 billion. Apple's reserve cash is 250 billion. So when you think about these major swings, the up and down, the volatility, when you think about could a government come in and destroy Bitcoin? Well, they might not be able to hack it. However, they could wreak havoc on it at this point. When we're comparing it to the total money in the world, Apple, at the highest market cap in the world, is at 800 billion right now, almost $1 trillion. But that's also good news when you compare it to the total money supply in the world, because they used to call these narrow money and broad money, but that's when you had to mail out for the certificate for your stock, get it signed, send it back. Now you have fractional lending, and you have E-Trade, Scottrade, all of those things that are pretty much liquid. Anybody ever use one of those? It's pretty instant that you can get your stock or get your money back out of it. So I would say those are all pretty narrow, and those are all forms of money that at some point soon people are going to say, well, which is better for me? Is it better to keep my money in crypto assets or mutual funds or a stock market, indexes? Is it better to put my money in gold, in real estate? These crypto assets are becoming one more place, store of value or investment that you could put your money into to help you diversify out. So if we were to think that of all that money, $155 trillion, how much of it might go into cryptocurrencies, crypto assets? If you were to think that Bitcoin would have network effect strong enough to say that it is the only currency, cryptocurrency that survives, if you believe that one and only one would survive, 1% of that money going into Bitcoin means that one Bitcoin would be over $70,000. So when you see these articles that say Bitcoin is going to be $1 million someday. This is how they're getting that math. They're saying if 10% of all of that money is taken out of real estate or gold or the stock market and put into Bitcoin, and here's a big qualifier, and Bitcoin has network effects similar to Facebook, where another competitor can't survive because it only works if everybody's involved in one. If you were to see the future like that, you could say that if 10% of the money came, it would be almost $1 million, $750,000 for one Bitcoin. So their math isn't entirely off for somebody to say that, but they may have a very jaded view of the future and how this cryptocurrency world is actually going to fall or evolve over the next few years. So we talk a little bit more in some of our research groups about valuations and how you're going to figure this out. Which cryptocurrencies and which crypto assets are going to get the right market share, but that's very in-depth. It could be a whole nother 5-hour presentation. So I'm going to move on from, hey, Bitcoin's going to be $1 million, but no, it isn't, to, all right, if you want to get started in it, how would you get started? I wouldn't recommend throwing your life savings into Bitcoin right now. Even though today is a particularly good day to buy some Bitcoin, you'd be pretty much buying the bottom here. The easiest way right now is Coinbase because they're trusted, it's reputable, and you can download their app, set it up, attach it to a credit card, buy some Bitcoin today. It's kind of a pain in the ass if you attach your bank account because you want to buy more than the $100 limit or $150, whatever they set on Coinbase. So if you set up your bank account, they have to know that your money's actually coming through and it's not going back, so they make you wait like 10 days. Yeah, whatever it is. 7, 10. They make you wait a while. And that's a pain in the ass if you're trying to buy the Bitcoin to go and buy another currency because you have to go through Bitcoin because Bitcoin is a unit of account on the internet. So a lot of people talk shit about Coinbase. It's also the most popular. They're adding 35,000 users a day right now. For anybody in the room who's making an app right now, just imagine 35,000 people a day. Just keeping up with that's ridiculous. And really over the past few months, all of these exchanges have had issues with keeping up with the amount of users who are adopting the technology. People keep yelling at Poloniex for not getting back to their support tickets. Well, when you're adding basically a football field full of people every single day, and you were a company with an office smaller than this, and it was just you and a few buddies, it might take a little bit for you to scale. So there's a little bit of that do your own research depending on which particular exchange, because a lot of them have had issues. Some have been hacked, some have done shady things, some without regulation have done things that are illegal to do on the stock markets that we are used to looking at if you look at stocks. Some of them have had issues because they're too naive. They were from the crypto world, but not from the stock exchange world, and they didn't set up certain safeguards that already were in existence and taken for granted in exchanges for the stock exchange. And they've had issues because of that. How many of you have heard of Ethereum crashing down to 10 cents and then going back up? Now, of the ones who heard about that, that was a few months back, how many of you knew that it was only on one exchange that happened? It wasn't the price of Ethereum, it was only one exchange that happened. And it immediately went back up. That's because one person decided to sell a large order, and it triggered some people's stop-loss sell orders. So then they sold, and then massive amounts were being sold, and that triggered more and triggered more all the way down to the bottom. And then, whew, all the buy orders that were set, if it goes this low buy, bought it all back, right? So some people really got screwed, and some people really had a great day. Now, in the stock market, that wouldn't happen. If you were on like your E-Trade or you're making any trades in a market that's fully evolved, they would have split up that order into many small parts. And they probably would have put it out using algorithms to make those trades on other exchanges so it equals the hit and the loss to all these different exchanges. That would also give them opportunity to see when it's coming close to these stop loss sells, that they could sell at the correct price and not trigger more, because then they could sell a few more in between, hit the next stop loss, sell that one where it is, then sell off a little bit more of that big order. They split it up, and that would never happen. So is that a case of this exchange being malicious or just stupid, possibly naive, maybe a combination of all of them? That's up for you to decide. The Bitcoin ATMs are interesting. Actually, one of the gentlemen over here just gave me his card. He's interested in selling. Matthew? Matt, we'll give you a chance to come up and make a quick announcement after this. But the Bitcoin ATMs are a real easy way to get involved. You put in a little money, it gives you back your little card, your paper wallet. Turns out that they're not all two-way. You can't go and get your money back through them unless you get a two-way ATM. When we were looking into that last week, we didn't realize they weren't all two-way. Turns out, interesting consideration if you go look up all the ATMs in the city. The other reason I say that Coinbase is a great start is because they went in and they did the due diligence of creating a user design or a platform that was simple enough and easy enough for anybody to understand and use. Versus an exchange like this is Poloniex. When you look at it, you think, well, I don't know what the hell I'm doing here. Like, this is very difficult. You actually have to take a day or two and learn new skills to use it. Versus most of us, with our level of patience, we want to get on, download the Coinbase app, go in, buy your stuff, be done. So I don't necessarily recommend you immediately go into the heavier exchanges and start trading altcoins before you understand what you're doing with them. Coinbase is simple. It's very easy. Lou, did you want me to mention your app?
Sure.
Is it running live now?
Yeah.
All right, guys. Another cool one Lou presented last month for us. He's got an app. It's called CoinFlash. It's coinflashapp.com. And if you have a Coinbase account, what it does is any of the credit cards you link up to it can round up the spare change, similar to an Acorns. Rounds it up and will put it into your Coinbase account in Ethereum or Bitcoin.
That's right.
And he's got some other cool features as well on the site that you might want to check out. Like you can check out Google Trends, the linguistics of when they say Bitcoin or how many times Bitcoin is searched in Google versus the price. And then you can back check trends against that and put in different parameters that you like and have a little bit of fun with it as you're learning how to invest. But a very simple way that's not too much money. It's a very easy way to get started. You just sign up coinflashapp.com, and that's Lou's app here.
Thanks, Joe. I got my computer if you guys want to just sign up afterwards.
Yeah, we'll sign up everybody afterwards because that's from our group that we actually set up this app. The next thing you want to talk about is the rest of the coins. We've talked about Bitcoin because it's the first and it's the easiest to compare. Some of these, Ethereum is probably your next most popular, and ERC20 is something you hear all the time. And that's because ERC20 is how we designate this protocol that says, okay, if it has the ERC20 protocol, then all the wallets and the exchanges and everybody who is set up to interact with ERC20 can accept that token and hold it no matter what it is. It has a certain protocol that says we all know how to use it. Versus without that protocol, all the exchanges and wallets would have to reprogram for every single coin that came out on Ethereum. Now, Ethereum allows anybody to fork a chain off it and then use their system, the Ethereum virtual machine, to run computing, to run smart contracts, as they call them. Smart contracts are a fairly simple idea that people complicate a little bit too much, where Bitcoin holds the numbers in the ledger, so we know how much money you have. Ether is like your Bitcoin in there. It's the currency that you use within the Ethereum network. But the smart contracts mean that it can hold 3,000 lines of code, and it holds something called the state of a contract, where your app, think about the state of what I'm doing right now. Right now I'm standing, now I'm walking over here, and I stop. That's my state. That's what it records. And it computes it through the Ethereum virtual machine. So all the people that are lending their computers to support the network. So instead of just the contents being a number, the actual computing itself is decentralized and can't be seized or censored. So when you go to their website, they say unstoppable computing. That's what their goal is. That's what they're trying to talk about. And there's a few other blockchains that have easy forks like that and are supporting smart contracts as well. If you go to coinmarketcap.com, you can see which of these are tokens and which ones are not. I recommend if you go to the assets, view as asset on CoinMarketCap rather than just the first front page, it'll show you if it's an Ethereum token or a Waves token or a Neo token, or there's multiple others that could be next. There's a few on Burst, I believe. So the most important thing to leave here with is understanding how to keep it safe if you do choose to buy it. So we have the public key and the private key. Think of your public key like your email address. You could give that out to people so they can send you stuff. Your private key would be like your password for your email. If you have it, then you can open up your email and do whatever you want with what's been sent to you. You could send it to somebody else, just look at how much you have. Your private key is what allows you to interact with what is in your address. This right here, on the bottom left, that little QR code for your public key, you can use the QR code or you can use this hash. When they talk about the hash, it's this long figure here. The reason it's such a long, crazy thing is that's how computers can't break into it. That's how the encryption works, that if you don't have those numbers, you cannot get into it. If you have it, it is yours. That's why we say if you do not have your public and private key, if you do not control your keys, you do not actually control your Bitcoin. This is where the number one case against Coinbase comes into play. When we say you don't control your Bitcoin because you don't have those keys, well, think about it. If you set up a Coinbase account, you're never entering that private key. They're controlling it for you on their network. So there's a few things that could happen. One, what if somebody actually hacks into their network? You weren't controlling your key, and it's too early on in this ecosystem to do anything about it. The other problem that you have with that is, remember our decentralization analogy that we all run out of here and go different directions? If the whole process all the way through isn't decentralized, then you're not getting the benefits because they can attack you wherever you centralize. That becomes a point of a target. If we all run out of here, we all run in different directions, and then I call you guys and say, all right, let's meet at Jerry's down the street. Now we're all together and can be attacked again. It's a much better target to get more than one at a time. Now, there aren't a lot of solutions to that yet, other than if you're technologically savvy enough, you can just do everything properly, protect your private keys, try to keep your stuff off in a hardware wallet or a cold wallet, something that is separated from the internet. All right, I use a Trezor, and the Ledger Nano S is a very popular one. The Keep Keys a rebranding of the Trezor. What these do is they let you plug in via the USB. You have to confirm with an LED screen to the side. So without having the LED screen, if you ever see any online that don't have that, you're not actually getting the 2 layers of protection there. Any of the hot wallets, that would be, think of like we said with the Coinbase, they're controlling your keys. So that's a hot wallet that you own. There's also hot wallets that are connected to the internet, but you control it. If you downloaded that wallet, you control it. If it's a Chrome extension, you're controlling it, but it's still connected to the internet. I also like to warn you, since there are so many scams out there and people trying to just get uninformed people's money, you shouldn't necessarily download the wallet from any coin that you find on the internet. There are some of them that are brand new coins that are kind of possibly scammy that I wouldn't recommend downloading anything from their website. So you have to do due diligence in that. If you're going to get outside of this Bitcoin and Ethereum and start venturing into all the altcoins, you definitely have to look at that and consider it. Definitely use 2-factor. This is Google Authenticator. Better than SMS because of a thing called social engineering, where somebody calls up your phone company, pretends they're you, says switch the SIM card. Now they're getting your 2-factor call. The other thing that most people make the mistake on is with passwords. Hacking usually doesn't happen the way people imagine it, where there's somebody with a hammer just breaking down the wall. They're just brute force. They're that good on their computer that they're figuring out how to get into your sealed protected thing. Usually what it is you were looking at some porn or buying Beanie Babies for whoever when it was like a craze in 2003, and you have not changed your password. You use the same password on every site. When that site went down, their whole list of contacts went onto the dark web. Think about this. Equifax with 143 million people just got hacked, right? If you use the same password on every site, you are putting yourself at risk by doing that. Now you think, how could I possibly remember 30 different passwords or 40 different passwords that are all 30 characters long? Use a password manager. 1Password, LastPass, Dashlane. They make them long nightmares that nobody could remember. This is my last slide to leave you with a few things to take yourself down the rabbit hole before we have our guests come up and present a little. You could get down on the money stuff right here. Definitely we're going to post this and send it out to you as well. Wikipedia, look at decentralized autonomous organizations. This will start you down an interesting path. Futarchy, ideas of prediction markets for governments. A real interesting one I heard about fairly recently is the idea of mycelium, the idea of crowdfunding the purchase of an island through an ICO and then running it through decentralized governance. Who knows if that would work or it ends up like Wilson. YouTube, some of my favorite people to look at. I like doing the conferences. Andreas Antonopoulos is always one of the best. He explains things very easy to understand with a lot of good analogies. I like Ivan on Tech's channel because he comes from a developer standpoint and really seems to not have a bias in any way other than just trying to educate people. But you definitely have to think about who's paying these people, where are they getting their money from, and why are they doing this. A lot of these crypto news sites, kind of blogs, whether it's CoinDesk or 99 Bitcoins or F News, you have to look at them and say, why did they start a blog that they have obviously a good amount of money and resources going into putting this together? Who's paying them? Then you find out that, okay, this group is owned by Digital Currency Group, which is owned by these miners. So when they're talking about this fork, they're going to be a little biased towards one side or the other. You definitely have to look at that. The useful ones, this CoinMarketCap, CoinGecko, Crypto Compare, Smith & Crown, ICO Alert. Those are some of the ones that I find that are very good because they're just information that you need to know. Not a lot of room for them to be very biased, or their motivation is totally they're paid as like a nonprofit entity, or their money has come in from donors. Crypto Compare is an interesting one. They have a good portfolio thing for holding your information, so you can see your money grow or go down. And then, of course, you got to get on your research forums. If you're going to do research, you have to go on Reddit. Even though there's a bunch of goofy stuff on there, you have to dive through. If you look up on Reddit and there is nothing negative about that coin, that means that all the bad stuff is being censored. Because if nothing else, somebody's going to put a dick joke in the Reddit. If that's gone, then obviously somebody is messing with it. And it's a reason not to trust that. On Medium, you can't just read the Medium article. You got to look up the author. Is the author the guy that invented the product? Of course he's going to say good stuff. Twitter's a great place to get guided to good information. And look for the people who are in it from... I like to follow guys that work with investment firms, research companies, because these guys are just trying to figure it out rather than influence the market. The Slack, GitHub, you got to get on those channels. And when you get into channels, I get like at least 10 emails a day. A lot of times from Aragon. There's a few of them that have Slack channels where I'm getting emails that look like they're from Slack, and it says like my Ether wallet, but the second L is a lowercase I, and they're trying to fish on you because you're a part of their actual channel. So you definitely be a little wary about clicking on things. Think about your security a little more.